Hello everyone from COP28 here at the pavilion of the European Investment Bank and the Benelux countries. We're very happy to see all of you here in COP, but also those of you joining online. Now, here at COP, one of the big topics has been climate finance. In particular, how do we drive that finance into projects that will make a difference, both in mitigation and adaptation, and crucially to developing countries. It's all about solutions. That's what the European Investment Bank is doing. That's what all of our panelists and speakers are interested in as well. So for this particular panel, we're talking about the way that we do that, private sector mobilization. That's in a way the holy grail of these projects. And we're going to look at one particular example, but also hear the perspectives of those of us on the panel today on how we can do that. We're going to look at one model called the Emerging Markets Climate Action Fund, which we're very excited about at the European Investment Bank. It's a platform that is supported by the Luxembourg government, in whose pavilion we're also in, the German government, and in fact we're going to hear from another government as well who is planning on supporting as well. So without further ado, I'm going to, before I turn to my great panel here, I'm going to invite our Vice President, Ambroise Fayolle, who is responsible for climate and environmental action as well as development at the European Investment Bank, to kick us off first of all. Ambroise, over to you.
Thank you very much, Shirin, and good afternoon to all of you. I will be actually quite brief because what we are here for is to listen from the panel and to listen from my successor Vera, who is going to make some announcement on the side of the United Kingdom. And also a very great announcement from Germany, from the Bundesministerium für Wirtschaft oder Umwelt. Okay. What I would like to tell you is why EMCAF is such an interesting example for private sector mobilization, for the partnership between private sector and public sector. And actually, this is an initiative that was launched 2 years ago. And this is the third time that we at COP do an event because it is worth it. It is worth it because it's really private sector mobilization with a very, very important institution called Allianz, German big investor, as you know. And also because it brings together multilateral development bank like EIB, and also bilaterals like the Luxembourgers, the German governments, and also now the UK. The UK is going to join us through the Foreign Commonwealth and Development Office. And actually, this is extremely interesting to develop. This is a fund of funds. Develop investment in funds that have a high value for renewable energy projects, for clean energy, for mitigation, but also adaptation. And we have actually a circular economy project, very interesting, through this fund in India and Southeast Asia. This is a fund that for a bank like EIB is completely consistent with the Paris Agreement alignment. And also it is a fund that is accredited as an ODA vehicle for OECD. So for us, this is really a great initiative. We are very pleased to see the developments and more contributors to this success of the fund. We as EIB also play a role as not only as investor in the fund, but also as advisors to try to help identify projects before they are actually the decision-making and the management of the fund is clearly private sector held with Allianz. But this is the kind of fund that we would like to see more, if I may just say that at the end, because we really think this is how you can leverage private money with the support of public institutions for the good of climate action in developing countries. So I'll stop there. Many thanks. And above all, many thanks to the German and the UK governments for their contributions.
Thank you very much, Vice President. So, as you said, we're really delighted to have Vera Rodenhoff here with us from the Ministry of Economic Affairs and Climate Action in Germany. Vera, I'll hand over to you, and maybe you can tell us a bit about why Germany feels this is a platform worth contributing more to as well. Thanks.
Yes, thank you very much. And thank you also on behalf of my minister and our parliamentary state secretary. You couldn't make it due to the snow chaos that we have in Germany. He will arrive later. But that gives me the opportunity to be here and talk about this exciting fund and where we're contributing to again. So we hear everywhere, and this is the way it is, that unfortunately to keep 1.5 within reach, we need to ramp up ambition. And to ramp up ambition, that also means that we significantly need to ramp up the finance, not only from public sources, but specifically also leveraging private money and making financial flows consistent with Paris. And this, first of all, means that we need to end finance for carbon-intensive activities and those not aligned with the Paris Agreement, and that we need to do what we're here to do, to leverage private finance. Only in that way can we achieve the Paris goals, the other Paris goals, if I might say so, because actually aligning financial flows is one of the 3 overall goals. So we as Germany are a trustworthy partner in climate finance, and we have continued to increase our climate finance. And we heard from our chancellor, certainly in New York. I don't know if you've spoken to today already. It's a bit delayed, but that we are overall providing at least 6 billion euros of international climate finance from the budgetary by 2025. And we already preempted this, so to speak, 3 years early in 2022. And this has great potential to support, of course, our partners in developing and emerging countries, and we will continue to do so. So, and overall, also, let me just reiterate that we stand by our collective commitment with other industrialized countries to provide $100 billion in climate finance annually. And we have already reached this. It is estimated by the OECD in 2022. At the same time, public funding will never be enough. Private finance needs to play a significant role there, and this hasn't been enough. We know that we need for $1 trillion annually until 2030 to actually achieve the energy transition. And this is when we come to the EMCAF, which is a great example how this can work. It's an innovative blended finance fund where public money mobilizes private investments by providing a first loss tranche and reducing the risks for the private sector. It works as a fund-of-fund model, hence mobilizing private finance both in the main fund as well as in each of the sub-funds and leading to a catalyzing effect. So the fund supports new investments, greenfield projects only in emerging and developing markets. It has a specific focus on renewable energy and energy efficiency, but we just heard also a bit of adaptation, mitigation in general there. It was launched in 2021 and endorsed at our G7 summit in Germany, and we have supported it since then, and so now are very pleased that again we can expand our contribution, and also happy to have the UK here who will also join in this initiative, and of course together we are more powerful than alone. So what I am happy to announce today is that we intend to top up our engagement at the EMCAF with an additional 33.3 million euros. And this also means that through this money, the 33.3, we will lead to an additional overall of funding of 100 billion euros in the top funded level, which then trickles down through the waterfall structure and will be expected to mobilize a total amount of 1.5 billion euros to the beneficiary level. So this is an additional 100 million euro on the fund level, and we expect to actually increase additional installed wind and solar capacity of about 1.8 gigawatts. So this means that we can actually significantly increase the clean and sustainable energy transition worldwide, and we can contribute to one of the main goals also we have for this COP, which is the tripling of renewables to 11 gigawatt globally by 2030. And this is where the projects funded through this fund will also contribute, probably financing 1.8 gigawatt in renewable energy overall, and thus making a great contribution to our tripling goal, on top of other contributions we are making towards that and announcing at this COP. So with these words, I would just like to thank everyone, especially from the EIB and other partners who made this possible, and look forward to the exciting results through the fund. Thank you very much.
Thank you very much, Vera. Thank you very much for what is clearly a vote of confidence, coming back to put more, but also for helping us contextualize in the context of the challenges we're facing, why these kinds or this kind of platform matters. And we're going to sort of get a bit more into that now with the panel. I'll introduce you first of all. I'm going to put my glasses because I'm getting a little old. I need to do that now. So we have, I'll start maybe right at the end. We've mentioned the UK contribution, and Emma Robinson will tell us a bit more about that. You're the lead advisor for climate adaptation and resilience from the Foreign, Commonwealth and Development Office in the UK. So great to have you with us. Next to you is Peter Hilliges, who is director at the Climate and Energy Competence Centre of KfW. For those who don't know, that is the National Promotional Bank of Germany, and actually is implementing this partnership for the German government. So it's great to have you as well, and give us a perspective a little bit on how we actually do this and why it matters. Milena Missouri is a colleague from the European Investment Bank, and you're in charge actually of all the funds that we do outside of Europe in what we call the sort of corporate part of the bank, dealing also with climate activities as well. And Martin, last but not least at all, the driver of this, the convener of it, and the manager of the fund, EMCAF. Martin Ewald, you are the lead portfolio manager for private equity impact investing at Allianz Global Investors. So there we go. Let's get into it. I mean, let's keep with the scene setting, if I may, rather than just before we get into why EMCAF is a vehicle that could work and maybe something others can learn from too. Just what is it like at the moment to invest in developing countries when it comes to climate action? What are the key challenges to attract capital for that markets? And maybe you can give us, if I can ask you each that question, a perspective on your own activities. What are you seeing now? Has the environment changed? You know, what is what you're seeing now? Who wants to kick off with that? Any volunteers? Martin.
First of all, thanks for having us here. Just to add one thing, the Nordic Development Fund also is one of the junior investors. We do not want to forget them in EMCAF, so they provide a similar tranche. We're eternally grateful for the help of the BMW UK, so we really, really appreciate it. And we love the cooperation with EIB, so that maybe as starters. With regards to what we face in the developing economies or those markets we're investing into, is really they dry up in capital. So therefore they urgently need equity. And in the absence of structures like we run it with EMCAF, there's no way on how institutional investors who manage like we do institutional capital, as in life insurance savers, money, could invest, because the risks associated are very high. So greenfield renewables, we mentioned that. There is a return ceiling to it, so therefore you don't have an upside which necessarily would justify such investments, because those individual decision makers always have to trade off between, let's pick American private equity as a referential investment, to a renewable energy in the global south. And that is by the principal nature of what we're doing more risky, but can't deliver the same rate of return. So therefore, what we do have to do is really build structures like EMCAF where we can limit the downside because of this cooperation with public and private, invest in a sustainable way. So therefore, we cooperate with the EIB and we implement the ENS standards of EIB, and at the same time provide those teams with the needed equity so they can start building. And I think this is one of the few wishes I really would have also to the COP, is a distinction between equity and debt finance. So I'm not just talking about volume, but really saying, we provide equity so people can start, so we can build an ecosystem of local entrepreneurs who then would build more solar and wind assets. And I think this would be that contribution where we're trying to aim to help into.
Milena?
Yeah, maybe just to complement is indeed a matter of de-risking the private sector so that they are attracted to a space that is perceived as being riskier. So I think we have to underline this aspect. It's not just the risk itself, it's the perception of risk that is limiting investment in what we call the global south and specifically in the climate space.
And the perception is often much greater than the real risk.
The perception is often much greater, and that's where we can really play a role as an MDB, because we can de-risk investment, but as anchor investor, we can also provide the comfort to the private sector investors that the initiatives we are investing in are solid initiatives. They will deliver in terms of impact, but they will also deliver in terms of returns. And this is what the private sector are looking for. They are looking not just, obviously, they are looking for exits, right? And what we are doing as anchor investors is to go via very thorough due diligence that is looking at the track record of our fund managers. It's looking at, are they really able to deliver the promises that they are telling us they will deliver?
Yes.
And so this is where we can really bring value in terms of de-risk investment by taking the first loss piece, but also in terms of providing our expertise. And I would finally mention one point, which is very important, technical assistance. In these countries, what is missing is obviously capital, but is also a pipeline of good, solid, bankable projects. And it's where we can indeed intervene by supporting the build-up of this pipeline with our technical assistance and capacity building.
And I guess, Peter, so the lack of pipeline is also compounded by a real deterioration since COVID, an increase in indebtedness, as Martin said, as well, less money, less capital. Is that the picture you see?
I'm wondering whether there's really less capital. The question is, it might be somewhere else. Yeah? So if I look at balance sheets of certain companies, they are still as big as they always used to be. They are only going now into treasury bonds of the US because the interest rates have been rising. And so the money is just flowing somewhere else where there's no risk, or no perceived risk in the US. Let's wait for the elections. So there is money. But we have these, I would hope, short-term uncertainties. Yeah? I mean, the macroeconomic effects of recent crises and the wars and the COVID and all of this has been going on for 3 years now. So it's not really short-term anymore, but I hope it will remain only for a little more time. And funds like EMCAF and other risk-taking ventures, they are able to bridge these phases. I hope they can work as stabilizers in such environments so that investments in emerging markets, developing countries can continue. Yeah, because we all know it takes a long time to develop them. Yeah, and so if you just start and stop every now and then when you have a crisis, then nothing is going to happen. And let me add one thing related to the COP here. I have really the hope that this COP will be stimulating a better policy environment for investments in markets where EMCAF is active. Yeah, this is really what I'm expecting from this COP. We all talk about private sector mobilization, and we know that private sector will go where business cases are being created, and they are not only created by actors like your funds where you're invested, but they're created in environments in the home countries.
But what kind of thing would that look like?
Well, we know there is going to be a pledge about renewable energies, you mentioned it, or about energy efficiency. And if countries are following through on these pledges, then they will hopefully also change the rules of the game in their home markets. And that's going to be changes that's hopefully going to be policy certainty at least until 2030, when they are supposed to deliver the 11 terawatts. And that's an environment where you can attract private capital. And then you have a player like EMCAF, and they are big enough to actually make a difference. They are not a 20 million euro fund, so they're a much bigger one. You talked about 1.5 billion at the beneficiary level. So they can harvest in these environments.
That's very important, and of course that is what one is looking for from these international agreements. Emma, maybe I can turn to you, and I know you work for a part of the Foreign Office which is focusing on the adaptation and resilience as well. But maybe with that in mind, but also what is your perception of the challenges of investing in these kinds of markets, and to what extent has that led you to look at platforms like EMCAF as a possible way around some of the challenges?
Sure. So just to build on what the panel have just said, we recently published, the UK recently published a white paper on international development and how we mobilize the trillions needed for sustainable development, especially for climate. And in that we talk about building pipelines of bankable projects. We talk about the innovative and patient finance that is needed. And we talk about fixing the market failures and improving the enabling environment, which you've also mentioned here through having very strong policy frameworks around our mitigation and adaptation goals. You know, it's not enough to just have an NDC. You need to show actually how you're going to deliver on that NDC. And the very same is true for adaptation. You know, countries have national adaptation plans, but really, and no country has kind of set out a real long-term investment plan of how they're going to build adaptation and resilience into their economy. So that's a real challenge. So when we saw EMCAF, we liked the kind of the structure of the fund, and we think it really speaks to the innovative and patient capital point. The structure of being a fund of funds and knowing it can support early stage development as well through direct investment in projects. That's really attractive because that can help local developers and help build the pipeline. And then our investment, which we're really pleased to be making, and fantastic to join EIB, Germany, and the Nordic Development Fund, really pleased to be joining. It's really important for us that this is a strategic investment because we want to see what adaptation investment looks like for private finance. We want to be able to better articulate that. So this EMCAF fund gives us a way of doing that. And some of the money is specifically focused on improving the monitoring, evaluation, and learning work because we want EMCAF to share lessons on what does an investable adaptation project look like. We want to share that more widely and move away from this discourse that there is no revenue potential or no savings to be made by investing in adaptation. And so that's really one of the key reasons why we invested.
Yeah, thank you. And I absolutely, you put your finger on one of the unique, I think, or maybe at least one of the standout elements of EMCAF, which is that it isn't just focusing on the mitigation, but the adaptation. And I think Martin can tell us a bit more about maybe one of the first couple of projects, but also, to answer your question, can we already give an answer to what a bankable adaptation project could look like, Martin?
Yes, we're learning on that. Maybe just before we
Yep.
shift to the example, which of course increases the tension in the audience. But I think also one of the elements of EMCAF is the beauty of cooperation between public and private. So
Yes.
we started off with KfW and BMWK to structure the fund, and we learned a lot about the lingo each and everyone uses. So we have a different language maybe than the public sector, then finance is a different sector than legal, whatever. And I think this is something we constantly learn. So we learn about the standards, we learn a lot from you, from your teams. You learn a lot from us, and it's a joint effort. So therefore, there's no intention to change that. And I think this is also important. So this level of trust, and this also enabled us to have a really open and candid discussion also with the FCDO on what is doable and what is wishful thinking, because we must not forget we're now taking more of the state position, but most of the money we invest in adaptation comes from the private sector. So we have a 200 million Allianz commitment, we have 150 million Volksam. So this is 350 million commitments which are on top of the junior. And therefore also we always need to strike that balance between we want to finance adaptation because we believe in it. We must find the use cases which must be scalable, so they must be profitable. And at the same time, we must provide for contractual cash flows or contracted cash flows as we find them in renewable energy. So therefore, this is also our daily practice in how we deal with our investors. And on the use cases, we have invested jointly in Arch Cold Storage Solutions. That's a fund which exclusively finances cold storage in East Africa. So they really build those cold storage warehouse facilities and the surrounding infrastructure. So the whole value chain needs to be created. And that is then in conjunction with our aspect of not having like a buy and hold fund, but like we are intending to buy and sell in order to build up that ecosystem. So in other words, we want the managers being able to build such a value chain, then aim to distribute it or sell it off de-risked, and then build the next one. So we de-risk on top level, they de-risk on GP level, and that then should help to the whole ecosystem to grow, and which is why it's so important also that we got the signal of BMWK that you would top up, because that also gives us more certainty about like how to plan for the pipeline, which in turn really allows more of the GPs to come up with the use cases.
I mean, I want to ask a bit more about that, how that works. Maybe Milena, you can, because when Vera was describing earlier, you know, that by giving that contribution, that will trigger another 3 times in money. It all sounds rather magical, but it isn't magical, is it? It's wired into the machine of the fund, and that's why it's an interesting one. We talk a lot about innovative projects, but this whole platform, this whole financing approach is quite innovative in itself. I mean, maybe Milena, you've got a take on that, and then I'll invite
with
others.
Pleasure, Shirin. So how does it work? It works that in a fund of funds, first of all, at the level of EMCAF, we are attracting private sector investors by using public money as a cushion to absorb first losses. And here in EMCAF, we have a multiple of 1 to 2. So for each euro of public money invested, we are able to raise 2 euros of private sector investment. The same in the funds that are part of the portfolio, so in the underlying investment of EMCAF. In every fund, you will see that you will have anchor investors, and EMCAF is an anchor investors, and with that anchorage, the fund manager are able to attract other investors. And then finally, what is the final outcome? Are equity investments in projects, and when you have equity, you can then raise debt. So that is, it's not magic, is mathematics. You know, you start with 1 euro, and ultimately you see that on the ground, the investment that you are able to make is a multiple of that.
Yes.
I will not go into the multiple because it depends on many factors, but it's a large number. We are talking about 20 times the initial investment. I think this is the very powerful message that EMCAF is bringing. And just to say that this is the way we have developed other initiatives. EMCAF is one of the initiatives that we are supporting at the EIB, but we see this mechanism of creating financial instruments that are leveraging our resources and attracting private sector investment as a very powerful tool. And a very powerful tool also to be able to implement these projects, not just in climate mitigation, but in climate adaptation. And I think we have already a few examples of how climate adaptation is actually financially viable. And because it reduces cost, it allows for making sure that the burdens of climate change on the most vulnerable is reduced. And we have a number of those.
I mean, maybe I'll turn to Emma again on that, because adaptation, I know, is a key kind of focus of the Foreign and Commonwealth Office in this regard. So, to what extent, I mean, how high, I mean, give us a perspective on the priority within the UK's policy. How high a priority is it? Or is this a sort of wait and see kind of signal?
No, I think, we're probably like 20 years behind where we are with the mitigation challenge. And I think the difficulty is we've seen a huge amount of public-private collaboration in the mitigation space in developed markets, in Europe. We've seen a huge amount, and we're still doing that. We're still de-risking the more expensive technologies. And we will continue to do so, and governments put business models in place, etc. What I don't think anybody has done successfully is put that enabling environment in place for investment into adaptation. And we don't have a clear answer to this question, what does adaptation investment look like? We can kind of spell out what it could be. It's savings, it's also new revenue streams, but it's largely savings as well. So we are really focused on mobilizing the trillions for climate, and we're thinking about how we need to use our public finance in a much more catalytic way. So this is about, making the most of the collective 100 billion, for example. How do we actually use that to scale wider sources? So, and we have, we've shown evidence that we're doing that for mitigation solutions in some technologies, in some markets, not all, but we also need to bring in the adaptation lens as well and answer that question quite quickly.
Yeah, I mean, arguably that real, true private-public collaboration doesn't actually exist even in the developing countries market, and that's the idea. So we'll come back to that thought. But Peter, over to you. I think you want to make something.
Yeah, there was just some thoughts crossing my mind when you were speaking. One is, I don't think anymore that these kind of structures are innovative as such, because, I mean, there are hundreds of funds today who do this. I think the innovation is in tuning the structure towards your objective, because the layering of capital, the triggers, the returns, and not to forget the TA component, have to be built so that they serve your purpose. So for adaptation, it might be a different mix as compared to renewable energies in Latin America. Yeah, because you can mix it differently. And that's, I think, where the magic lies in these mechanics that we know of. And to me, EMCAF is just a very, very good example of doing this right. Well, we as KfW, I think we are invested in about 60 funds of very different objectives, and they are certainly very different in size and in, I wouldn't say in impact, but in terms of scalability. Some of them are pilot funds which just do 2 or 3 transactions just to try something out. Some of them are trying to be more mainstream and build a market. So, but they are all based on the same mechanics.
Martin.
If I may respectfully add / disagree, I think first of all this whole narrative around innovation, I think I'm not always quite so certain if that's the right approach we have, because what we need is something which is done and tested. So if we want to scale up, or we want this billions, trillions, whatever, the only way and how it can work is that this element of trust, and we have great element of trust with KfW, for example. Really, it works amazing because we learn to trust each other, to align on language, and this allows us to tackle more complexity. So I agree on the instrument blended finance itself is nothing new. I mean, it's a initially debt instrument. The innovation, I still see it in the application of the different standards. So just to give a bit of insight in our discussion with FCDO, we had a long discussion around EIB colleagues, FCDO colleagues, we at Allianz GI on like how to define resilience, how to define adaptation in your pure play terms, in the terms of what we can also apply on the ground. And I think therefore also it's if fine-tuning in like a more innovative structure doesn't count as innovation, then I agree with you. But I think this is the important part. We should not say we need a new instrument.
No.
And this is why it's so cool what BMWK does, because you don't say we need a new instrument. We say like this needs to run and then we can scale. And I think we need fast scaling. And we, as Vice President Fayol said, like 2 years ago we started. We're still in the ramp-up period, but now as also our pipeline is properly filled, we can execute fast. And I think this is what we need. We need a fine-tuned cooperation between public and private, which works,
Yes.
and then we can change the underlying. So we have the toolbox now. If we change the underlying towards more adaptation, something we prepare right now, then we have the tier of position for this scalability.
And maybe we can explore, I'll come to you now, Milena, maybe I know you want to make a point, but also maybe think about this. What is it then, just to deep dive a bit on this public-private, what is it that each side is looking for from the other? What is the private sector, do you think, looking for? What are banks like the EIB, the public sector looking for from the private?
No, indeed, I think this is exactly the solution to the problem that we are facing. Partnership, partnering together, and everyone bringing to the table what each one of us can do best.
Yes, and we talk about partnership all the time.
All the time.
And it's getting a little bit of an overused word. What does it mean then?
Exactly. It means that each one of us has to look at what we can do best. In the case of EIB, first of all, well, we have the capital, of course, but we have also a very long experience developed within the EU that we can export to the rest of the world. And this is what we can bring to the table. We have a very strong expertise internally in everything relating to climate, everything relating to the project that we want to finance. And this is what we can bring. We can, as Martin was mentioning, there is a dialogue on what are our requirements when it comes to environmental and social criteria that we want to see not just respected, but also monitored during the life of the fund. So this is what we can bring to the table. The private sector can bring other elements that is, first of all, the knowledge of investing, but also the closeness with our final beneficiaries. So by bringing all of this together, we are solving the problem.
I'm going to come to you, Martin, but first I want to ask Peter. I mean, I'm presuming that the KfW has a sort of similar approach, but going back to the point you made, I think, earlier as well, it is also about the projects at the end, and that is something that these both you, KfW, EIB, can bring to the table, that experience on the ground too.
Yeah, well, I remember when we tried the first ones, we were pretty nervous about what we were doing, and so we learned a lot on the way. And certainly not all were successes, I'm sure. So, but you have to improve on your experience and do it better next time. But since you were asking about this partnership thing and what we expect, I mean, for us as KfW, what we are doing on behalf of our German government ministries is that we try to maximize impact from the resources that they provide. Yeah, so if BMWK is here and they are saying we're putting another 33.3, as I learned today, million euros into this, then they would expect a maximum impact. And the impact is not delivered by the public money directly, but by the private money that is extra. Yeah, and the more private money we enable to flow to the objectives that are being set by the financiers, the more success. So that's basically, I mean, the fund itself is not an objective. It's what, in the end, results in the field, let it be a resilience benefit or a mitigation benefit.
Exactly, and as you said earlier, Emma, it's looking for those examples of the projects that will work from your point of view. I mean, is that what you look for in terms of impact? Is that what I think you're contributing 9 million, is that right? And what will you consider to be a good return for your buck, if I can put it in that crass kind of way?
So I think, that's what I'm talking about when we're saying about we're using public finance in a way that, and I agree, the innovation is, it's what does a blended finance model look like when we also want to finance resilience? Is it, and we've seen examples of, the debt structures as well as this is an equity structure. So as Martin says, we think that's very important considering high early stage risk and innovation. But I think what we're trying to do is work out, okay, well, what does that look like? What do these new structures look like? Or how do we modify those old structures? And that's where the real value for money is, because then we can share those things and we work with other partners and we make sure that we target public finance in that way where it is going to be catalytic, because otherwise it's an ineffective use of our public finance. It's clear public finance is vitally important to address those very, especially adaptation solutions that will not attract private finance. They're public goods and things that need to be supported. But we need to make sure that where there are opportunities for returns or for savings, we're translating that and we're using the public finance to try to unlock that. So that's really what we're trying to, and that's what we'd see as real value for money. Having some examples and, for example, a lot of what Germany and the UK do is putting money through the GCF, and the GCF have been quite effective, I think, in their private financing strategy and using GCF equity to support private funds.
The Green Climate Fund.
The Green Climate Fund, sorry.
Yeah. No.
But they're all quite different structures, actually. So that's what's very attractive about it, seeing these different structures and how they work and how they grow, and the strength of having EIB behind the EMCAF work. That's sort of a key reason for us why we're really keen to invest.
So I'm going to come to you in a moment, Martin. I want to just say for those of you in the room, if you have a question that you want to ask the panelists, keep it in your mind, and I'll come to you in a moment. And somebody may pass you a microphone. If not, I will give you mine, if you promise to give it back. But first of all, Martin, tell us a bit about managing those interests, if I can put it that way, of the public and the private. So we've heard some, what are the interests of the UK, of Germany? How do you manage that? How do you deal with that on a day-to-day basis? And how does that affect the way you allocate EMCAF's resources to particular sectors? Thank you.
First of all, I think the beauty of EMCAF, it's a privately run vehicle, so therefore we finalize, we negotiate with our friends from BMW and KfW, we negotiate terms, so those are then frozen. So it's now, FCDO came in, of course there are some certain requests with regards to reporting or whatever, but we couldn't change the agenda from the get-go. So no one coming in then would have the leeway to say, now we have a new government, whatever, we change everything. I think this is really, really key ingredient for what we do, because this also gives the confidence to the private investors.
Absolutely.
That this will not change because we now have a different agenda. So therefore, our job as fund manager of EMCAF is therefore then to understand what would come with such a junior investment or an additional senior investor. And then we have to live within the language of our LPA, so therefore we predefine the strategy, which then is nothing we could change without the consent of our investors. And here again, the largest chunk of capital comes from the private sector, but therefore we stroke quite nice of a balance. I think this is also something to add to what Milena said. The beauty also lies within the way on how we talk. We have very confident organizations within this fund, so everyone does not really have to play any games when it comes to solving issues. So I think this is the first one, and therefore also we go on joint due diligences. There's really no skeletons in the closet because someone tries to hide something. And I think this is the basis for us, how we can also then talk to new governments. And ultimately, then it really comes to the dialogue and back to the need to find language everyone understands. So therefore, I spoke about the adaptation resilience language we learned, which we then will talk to our investors, and in turn, therefore, we do not only build this ecosystem on the ground, which allows us to find the managers on the ground. We've also built the ecosystem which allows us to run more funds like that. And then we also build an ecosystem of more investors willing to invest into such blended finance vehicles, because also that's something where we need to build trust. And I think on all those three levels, it works rather well.
Thank you. Gentleman there, I think, may have a question. Do we have a microphone, or shall I pass it over? Okay. I think that means that I'm going to give you mine. Well, you can, but we'd also like our online audience to be able to hear you. So I'm going to give you my microphone.
Thank you very much. I'm Vivek Mittal from Africa Infrastructure Development Association. Not so much as a question as an interjection. We run a non-profit association of developers and financial institutions, and many of your institutions, so EIB, DEG, BII, BIDG, that whole alphabet soup, they're part of our network. The partnership is about creating a learning ecosystem. There is a learning impact of repetition and replication of deal flow that we don't see in developing countries, that we see in Europe. So if you look at how solar, wind, offshore wind came about in Europe, that dynamic, that ecosystem that we have in Europe to take new ideas and make them happen, doesn't take place. We don't have that opportunity in developing countries. That is where, so we have solutions. I can keep talking about what we do. We have an accelerator. 2 of our companies, 2 startups, are actually going to be signing a PPA, and these are EU and UK-backed entities. So if you've heard of Africa Green Co. and Serengeti, they're signing a merchant PPA later this afternoon. You're all welcome to go to the Zambia Pavilion and witness that. And but that's taken 7-8 years. Is it worth repeating that? Will it scale?
So we're going to come back to that. Thank you for that. That was a really interesting point, and we'll pick it up. But I think the lady here would like to ask.
Thank you. My name is Yavai. I work with CAMCO, a climate and impact fund manager. We met at the Nairobi Climate Week with EIB, being hopefully soon to close on an investment in Spark, one of our financing facilities. My question is about localization. So with Spark, which is for financing CNI, so captive solar or captive renewables and energy efficiency, we have designed this facility as CAMCO specifically to support local developers, so to work with local developers, and to be able to finance projects for local companies, not the big, Coca-Cola's, let's say, of the, bases in Africa, but really to support local companies. So here we come to this discussion that President Ruto has mentioned again at the start of the conference. Climate action should not come at the expense of development. Rather, there are so many synergies that we should capitalize on. We're working on a similar approach on adaptation as well. Would love to talk to you about that. But what is your approach to localization? So we're trying to really ingrain it in the funds that we're designing. Does that matter to you as investors, and how do you look at that to support locally led growth?
Thank you very much, both of you. So maybe coming to the gentleman's point there as well, you were talking about a learning ecosystem and how we actually create that. But I guess if I can add that question to maybe a broader one as well, which is how do you actually encourage more collaboration in these environments between the private and the public sector, but that includes creating that, what you call a learning ecosystem. So that's the first question. And then, well, let's take that first, and then we'll come back to the localization and how important each of you feel that is in your approach. But Martin, maybe you want to kick off with the first question.
If my mic works, I first have to say how much fun it is always with you on a panel. It's really fun.
I mean, I also have to say that this wouldn't be a COP if we weren't competing with the next door pavilion. Hello, but anyway, we go with the flow.
What's quite important also, what we try to do is we try to help also the local teams on the ground to get access to capital besides EMCAF. So therefore, we have a sister fund called Africa Grow, where we invest in African private equity and venture, also done with KfW. And what we do see there is, for example, that the local GPs, really after we're in, they have a proof of concept that there's private capital actually flowing into the GP. So therefore, we can already see that there are knock-on effects with regards to us being in there as a commercially thinking investor, as someone who's backed by commercial investors. So therefore also all those side letters we have to negotiate, or we're negotiating, really have to contain all the clauses someone who is paying taxes in Europe would have to do. Same goes for reporting, by the way. So therefore we are integrating that, like in each and every transaction, really trying to help the GP, the manager on the ground, to gather that knowledge, so that like in the next round, either we're someone who's coming in with a lower first loss, or then pure play commercial capital can flow in, because that's the only way. We have to move this frontier of investable universe towards more impact, and therefore we are the forefront of commercials, which then in turn really should also enable the local teams to gather that technical knowledge.
Milena?
Just to say that at the EIB, developing the ecosystem is of utmost importance, and that's why we have a very modular approach. We invest in fund of funds, but we invest directly in funds that are locally based. For us, it's very important to make sure that our fund managers have presence on the ground. Otherwise, this is absolutely a no-go during due diligence. But we are also, investing in platform like CAMCO that are not, the typical fund manager. You're a different entity. So we look at different options to make sure that our money reach the final beneficiaries. We have lines of credit to microfinance institution. We work via commercial banks. We try really to reach out to the small projects, to the mid-caps, to the small entities. So yes, just to say that we have the ecosystem, it's at our heart. And just to mention that we also try to develop the financial markets. So it's not just by providing the money, but making sure that the financial markets are also developed in the countries where we operate. And this is via our technical assistance, but also via other tools, like, for example, we are putting together a fund that, in a sense, is similar to EMCAF, is the Global Green Bond Initiative, where we are trying to make sure that we support issuances of green bonds by the different countries, our partner countries.
And actually, I mean, in that, we don't have our Luxembourg colleagues here at the moment, but I went to a really interesting presentation by the head of the Luxembourg Stock Exchange, and she was explaining the work they're doing with Rwanda and Capo Verde precisely to help create that local capital markets market, which is really, really fascinating. And I guess, Peter, like the EIB, I think people have this idea of KfW as well, of being, just interested in the big kind of infrastructure stuff, but actually it is about all kinds of different models. Maybe you can respond both to the gentleman's question about the learning ecosystem, but also the localization issue.
Yeah, right. First of all, I totally agree with my two colleagues here on the panel, about the significance of the local partners, especially when you look at the project level, the investment level, where you're actually doing your thing, your infrastructure or your business. What I'm wondering about is, and that's really more of a question than a statement, is the public-private partnership in the partner country.
Yes.
Is it always similar? So I lived and worked in India for a couple of years, and there I think it was kind of a balanced game between the public, the governments and the private sector. Sometimes it worked well together, sometimes it was really conflicting. I believe there might be countries where you try to avoid the public sector, so there's no partnership, but you can correct me if I'm wrong in that. So sometimes, you can't ever avoid the public sector and the government entirely, obviously, because they're in power and they're setting the rules. But if it's a partnership or not, that's a different question. So when we talk here about public-private partnerships, right now with FCDO and EIB and KfW sitting here, we're talking about public sector from a donor country. But that's not the local public sector. So that's one thing about the partnership question that I wanted to bring up. And obviously, I mean, about localization, I fully agree. I mean, that's where the music is playing, isn't it? So that's where it's supposed to be. And then Greenco is quite an active player in Southern Africa, and I mean, that's local. Yeah, so that's really how it's supposed to be.
Let me bring you in here, Emma.
Yeah, sure. You know, I'm really glad this point was raised, and you mentioned like tapping into local capital markets as well. As we've outlined in the white paper I mentioned, that's one of the key things that we need to have much more of a focus on. My colleague Charlotte here is the expert in this if you want to chat to her afterwards. And our sort of key offer here is through a specialist DFI that we support based in Nairobi called Financial Sector Deepening Africa, which can really help deepen those local capital markets. For example, they helped create Ethiopia's first stock exchange, many different initiatives at different sizes that they're looking at. And you mentioned the kind of also the capacity building points there and how we do more in that space. And we need to talk about local currency financing and how we find ways to incentivize more of that and how we do that in different methods, because that's obviously, we can't talk about local partners without talking about local currencies and deepening their own local markets.
Absolutely. Martin, let's come back as we slightly wrap up our panel discussion to EMCAF and to the public-private partnership. And what I think I would like to ask each of you is, what do we need to do more of to have, you know, more of EMCAF? And also so that you don't, if I can use the phrase, have to go around with a begging bowl to kind of keep this thing going. What is lacking? Is it signals from gatherings like this, or is it regulation, or what is needed to unlock what we think is a pretty good model, but obviously limited in what it can do on its own?
So what we need is, as I said, like predictability. So we really need to know, you know, this is the area we want to invest into. Those are the instruments we can use, and this is then how we can build vehicles which are then attractive to investors, or they're not. So therefore, coming back to what Peter said with regards to money available, I think there's less money available because of the denominator effect of on debt, to say that. But I think what we need is first a signal of gatherings like this, saying, you know, blended finance is an instrument which we like as governments, because also really in EMCAF, for example, the intention is not to burn that junior capital, the intention is to invest it and pay it back. So therefore, we want to create sort of more revolving instruments. And I think this is also quite important in like how to make use of instruments. So if that would sync with gatherings like that, then it would be understood that it's the right instrument for tight budgets, because it could be revolved. If it would think that equity is different than debt, then I think the use of capital could be more pinpointed. And then ultimately really is communication around like what is doable with regards to size, because that's also one of the things why EMCAF works, is because, as Milena said, we're fund of fund and we are investing globally. So if we have a very narrow piece of junior which would just cover one country, one sector, you would have a single country risk no matter how much junior you get. And I think therefore the understanding of risk and perceived or real risk of institutional investors, if that would sync with gatherings like that, I think those would be the ingredients for us to scale up, because ultimately it should be our target to launch 2 EMCAFs every year. And I think this is also something where we as private sector then would have to bring this to the table to be able to digest that much junior, which is currently not available, because, as I said, like we have to individually talk to each and every donor to get the capital together. And if that was more standardized, then of course there would be also more offering.
Thank you. Milena.
I would just say one word, results. If we show results, that is what is going to make a change and make sure that we will be able to attract more investors to initiatives like EMCAF. So I'm very happy to see that after 2 years of having launched EMCAF, we are now celebrating a 3rd closing of EMCAF. Maybe in the future there will be another closing of EMCAF, because we intended to indeed reach our target size. So this is the idea. If we show results, and they are already there, and certainly more are to come, we will certainly be able to have more of initiatives like this.
Peter.
Well, I was going to say one word, that is Article 21C.
Please don't.
No, but what I feel, what is an important supporting trend is that private sector interest, and we talked about private sector a lot, probably is aligning more with sustainability issues, sometimes out of conviction, sometimes because framework conditions have been changing. So if you look at the green taxonomy in Europe, yeah, that is one driver for financial players to redirect their rationale for investing. And so maybe we find more private sector players willing to become Article 21C aligned in the future.
Right. Thank you, Peter. And I'm going to give the final word to you, Emma.
Well, I completely agree with Peter on Article 2.1c. It's really important. And this, actually, a lot of it is not a financing challenge. It is a policy challenge. It's how we operationalize the Paris Agreement, how we operationalize making financial flows consistent with it. Isn't all about the money. It's about the policy and the framework that we create. Of course, that can be quite difficult in certain markets where there may be weaker governance systems and governments can't necessarily put in place the strong enabling environment that's needed. So how do we then work around that? And completely also agree with Milena on results, because when you're spending public money, all public money, you need to demonstrate you have very strong results and we're actually achieving the aimed objectives. So yes, sorry that wasn't very pithy, but...
No, it
Thank
was
you.
great. I think absolutely, when we gather again, wherever the next COP is, COP29, I think we'll be celebrating more results, more projects, and that's key as well. Seeing those projects, talking about why they work, and maybe the UK will have more examples of why and what a bankable adaptation project looks like. I think I'm going to end it there. I'd like to thank the panel very, very much for a really fascinating and rich discussion. Thank you also to Vera and Ambroise, and thanks also to our audience. Bye for now.
Thank you. Thank you. Thank you.
And thanks for the good moderation.
Yes.